Hey guys, what's up and welcome to a new Tesla update video. So as usual today, let's go over the market because man, what an interesting day today was. And let's figure out what we can expect from this and what the next, rest of the weekend, potentially next week has in store for us. If you guys enjoy the videos as usual, please don't forget to hit that like button. It does help quite a bit. But nonetheless, let's just get right into it. So Tesla, surprisingly, actually ending the day green, up a decent amount too, 1.66%, which puts us at just shy of $711. Not too bad, especially considering the general market, like the indices at least, were all red. Even the VIX was red on a red day, which is interesting. But yeah, so we'll go over the indices today. Is a very important day. There's a lot of very important things to talk about today that I personally think are gonna that can dictate essentially how the rest of this week and next week will play out. In my opinion, of course, not financial advice, just in my opinion. So today was a wild day, right? So the CPI came in substantially worse than expected. It was like, I think expectations were like 8.7 or something like that. Like the high 8s came out at over 9, like 9.1 I think it was, right? And the core CPI came in higher than expected. So pretty much just CPI as a whole came in hotter than expected across the board. Not good. What does that mean? Well, that means inflation is still more rampant and it's still increasing, right? The idea is you want to see at some point a peak. You want to see the peak happen. You want to see the peak being, an obvious peak essentially, and then you want to see that inflation is going to start declining over time. That's what you want to see. Today has pretty much said that is absolutely so far not the case. Maybe maybe the June CPI, which is what we got today, was the peak, and maybe it'll start declining from here. Hard to say for 100%, right? But clearly, so far, we're still increasing, which is not good. What does that also mean? That also means that the Fed now has potentially more room, or not even room, but like they pretty much almost have to, if you will, increase the rates a little more aggressively, maybe by 75 basis points, maybe even by a full point, right? And that's not good for stocks like, tech stocks, growth stocks, anything like that at all, because, well, the higher the interest rate, the higher, the more expensive it essentially becomes to borrow money, more or less, right? And that's not good for growth stocks, tech stocks, it's not bullish, if you will, for them, right? It's not a good sign for them specifically. However, with that being said, so even though the markets went down, Tesla still ended green. However, with that being said too, Tesla did plummet pre-market, and then it just completely rallied up in the morning, essentially in the first couple hours or so, which is insane. So I did not expect something like this, not to this extent. I did have a slightly higher chance of a bear than a bullish scenario play out, which is what happened. But I will admit, I expected it to go to 700. I did not expect to go to 723 or whatever it is that it stayed for the most of the day. Like, that is ridiculous to me. However, I will admit, and I will say, guys, I want to make this very clear. Personally, just my opinion, I think it's a bull trap. I think it's a massive bull trap, actually. I think this right here, so far it clearly looks like a bull trap, because not only did we have this massive red sell-off towards the end of the day, but we actually ended even lower than this. Personally, I think this is a massive bull trap. I could be wrong. We could rally. Today's rally was already kind of weird. But from my experience so far, and what I have seen happen so far, is that when we get this kind of bad news, we kind of, get this initial sell-off, and then we end up getting, pretty often actually, surprisingly, this crazy rally in certain situations. Even though the markets ended red, they still rallied compared to what they were pretty much at open, right? They still ended substantially less red than what they were at open, right? The market opened at, the SPY at 374 essentially, and it ended at 379 almost, right? Even though it's red, it's substantially less red than what it was in the morning. So when I see these things happen on bad news, bad data, a lot of people, when they see this, they start thinking, oh, it was priced in. We're fine. Look at that. We rallied on horrible information. That means it was priced in. I used to believe that, but several times I have gotten burned on that. And instead, what usually happens is you rally on these almost as like a liquidation trap. Almost as if the big boys are letting friends get out, if you will. And pretty much the next coming days, you get a massive rug pull. Again, could be different, right? Again, if it was just that obvious, then this game would be a lot easier. Could not be the case this time. However, more times than not, I have seen that happen. So I just want to be very clear that regardless of what happens, I do suggest, not financial advice, make your own decisions, caution. Personally, what I see from this is a bull trap. I see a massive bull trap. I personally think maybe tomorrow or Friday maybe early next week, but sometime very, very soon within the next few days, I really do believe that this is going to be a rug pull. Why? Because the data that we got today for inflation, CPI, was atrocious. Like, it was literally like arguably worst case scenario almost, right? Not good. But that's just that, right? But let's look at the technicals. Let's see if the technicals can back that up. So I want to go ahead and look at the 15-minute again one more time. So essentially, actually look at the 3-minute. We'll do 5-minute. We'll do 5-minute. Essentially what happened intraday, right? We had a rally, bounced down, and then we kind of had this ascending little wedge. So we kind of rallied up like this, right? Something like this. And then the second we broke down out of this on this really massive green candle, came back, we tested it successfully of a breakdown, and then we came back down even further, right? This is like the classic, it's just textbook essentially, right? Pure textbook. So that happened. So that's essentially the intraday analysis. That's kind of what happened intraday, right? Nothing too crazy, but it is what it is, right? Now, as we look at on the daily, and I want to look at other things as well, not just Tesla, because it's indicative of how Tesla can move. Remember this kind of bear wedge that we are in? So remember how we broke out of it and ended up being a false breakout, and then we just completely collapsed under? So we still set a lower low here today, right? Which is not that bad, honestly. But however, what is interesting to note is the fact that we did rally up, and we essentially rallied. I didn't move this blue line at all. This blue line has been the same for like days. We pretty much went right up to the blue line and got smacked down right at the blue line, right? Just exactly at it. Why? Well, because not a lot of people are also looking at this exact same thing. As it gets closer and closer, a lot of people are probably starting to put bearish positions. Maybe they're selling. Maybe, you know, the traders are leaving. Whatever the case may be. The point of the fact is the technicals show the fact that we came up to this blue line and got rejected again. How we did here, how we did here, kind of here in a weird way, right? This was like a massive trap. Same thing happened once again. But to kind of not reiterate that, but to kind of like make that point a little bit stronger, it's important to take a look at the indices. Now, I will quickly start with the QQQ first. QQQ actually doesn't look that bad. QQQ actually looks decent. In terms of this bear flag, at least that it's in, it did bounce right out the blue line, which is actually quite good. The QQQ doesn't look that bad, which is the one little sliver of hope in my opinion. However, it did get smacked back down under the red line, though it's still arguably finished above it. So the QQQ actually doesn't look that bad until you look at the RSI, kind of pointing straight down despite this, you know, technically a green day on the candle, at least, because we ended higher than we opened, right? Decent volume too. Well, at least relative to the past like week and a half. But the RSI looks not the best. However, with that being said, going over to the SPY, well, I'm sure you don't need me to explain this. I think this is quite obvious. However, I will explain it just in case. 1, 2, 3, didn't even go to the 5, or the 4 rather. We just collapsed right under. The SPY came right back up, retested this bear flag that we just broke out of. Similar to what happened to Tesla, just on a slightly different way. Came up, retested this bear flag that we just broke under, and successfully, which is a bad thing for bulls in this case, successfully for the bears, retested it successfully and broke back down and got smacked back down once again. So, in other words, the way I personally look at this is, by the end of this week, if the SPY cannot reclaim this bear flag that we are currently in, which then if it does, we can start talking about potentially rallying back up here, and if Tesla cannot break once again out of this bear pennant, if you will, that we are currently in, if we cannot break out of those, in my opinion, by Friday close, to me, that's not a good sign. This already, to me, is not a good sign, but just seeing something like this is also not a good sign. And even further than that, we have the VIX. I personally thought the VIX from here will drop back down here and go. But unfortunately, that wasn't the case. So, one sec, sorry guys. But instead, the VIX just skyrocketed, came back down. And in this case, similar to what the SPY just did, just on the bullish side for the VIX, right? The SPY broke down on the bear flag, retested it and successfully for the bears, and then, you know, is now successfully breaking down. The VIX is quite the opposite. It successfully broke out, retested it, and arguably, it's kind of on, you know, it's close. It's very close. This is like very, very, very close to like arguably not successful. But nonetheless, it's like right on the line of potentially bouncing off of this and being successful of a breakout and then potentially rally. So this is going to be really interesting. The rest of this week is going to be extremely important. Unless the market can get some beautiful energy and bull energy, if you will, back in ASAP, I don't know how it's looking. It's not looking too hot. So that's kind of what I'm seeing in the very moment, guys. Taking a very quick look at the Bollinger Andrew Band, we're above it, which is great. The EMA, we're pretty much getting rejected by just slightly. Above the 10 and 5 though. Oh, sorry, above the 10, below the 5. So a lot of mixed signals. The RSI is pointing up. Volume was decent. So a lot of mixed signals here, guys. It's very, very difficult to determine in this one. However, again, I personally believe that this is more bearish than bullish unless the next 2 days end up being great, like really big rallies. If we have any form of weakness with tomorrow, and especially for the rest of this week, which I think we will, that to me is not a good sign. So we'll see what happens with that. But other than that, thank you all so much for watching, and I'll see you guys for the next one. Peace.